Let's get into these individual stocks. RCL Foods was previously Rainbow Chicken until it merged with Foodcorp in 2013.
Indeed. So in the Rainbow days, it was always the South African chicken market leader, and it was founded by the Methven family back in the day. It got taken under the wing, you could say, of the Remgro group. And in recent times, Remgro has started putting other assets that it has of a food nature into this thing. So first they bought Foodcorp. That was just an out-and-out purchase. Then they added another business called TSB, which I think stands for Transvaalse Suiker Beperk, but it's got assets out in Swaziland as well. It's now a combination food and basic foodstuffs producer.
Market cap here, 16.2 billion rand, a PE of 99.83, dividend yield of 2. So on the expensive side, let's start there.
Yeah, look, they've gone through a lot of restructuring and so forth. So there's a lot of once-offs and so forth in that specific PE number. If you strip that out and you just take the headline earnings or the core from core operations that you're probably going to look at next year, you're sitting with for the half that they just reported, which is probably the one you want to use, with about 70 cents on a headline earnings per share basis. So if you double that or you get a bit of growth on that, you're sitting with R1.50 on an 18 rand stock, which puts it at a P of 12, which is a different story. So there's a lot of nonsense and noise in the numbers at the moment, and I think that's what happens with restructuring. What is positive from them is certainly the diversification aspect of them. It's not just a poultry producer. They're sitting with Foodcorp, which is about 30% of revenue, 40% of Rainbow on the chicken side. And the TSB, they chunked a few other businesses with that. That's, I think, about a 25%, and then the logistic vector or something is like 8 or 10% of business. So all of them are firing at the moment and certainly looking better, and the restructuring looks like it paid off in the recent results. They came out, I think, 2 weeks back with their 6 months results.
Paul, this theme has come up repeatedly over the last 2 years. You've never been tempted to buy into an RCL.
We have actually been tempted, but we've been unable to, and that's because it didn't have the liquidity with Remgro's big holding and then all the subsequent changes. But I think it was interesting because we thought it might be a good opportunity, because often the market has no real sense of what the earnings base ought to be. And in this case, not only did they merge businesses, but they basically killed a whole lot of Foodcorp's debt, which they decided just to pay off. That caused some prior year comparative issues. And then when they bought TSB, they did a complex reorganization of the corporate structure in order to effect the change and to buy the interest out from Remgro. Remgro's now got a big chunk. So actually this thing's a lot more interesting. And as Gerbrand says, you can now finally begin to see that this is a company that is in a position to earn something around 1.5 rands a share.
Talk to us about the share price performance, Gerbrand and Paul.
Yeah, look, it's like all the other guys who were struggling for a year or two in the 2011 and 12 period, and then the maize price dropped from then, and the guys were seeing better fortunes for the chicken side. But if you take these guys against the other chicken producers, it's certainly underperformed. I think it's done about 30 or 40% for the last 12 months, where some of the other guys has done actually 100% or even 130%. Plus, you're sitting with a Foodcorp side of business, which competition is Tiger Brands, Pioneer Foods, etc. They're trading at 20 and 25 PE multiples, which is much more expensive than you can acquire Foodcorp within this business. I think the chicken price business is probably correctly priced at a 12 PE, similar to the Astrals of the world, the bigger guys. And then on the other hand, you're sitting with sugar that's been depressed for quite some time. So that's a nice asset to probably own as well from a value perspective.
That's a good argument, and I buy all of those bits and pieces. But maize and sugar prices. I mean, the maize price was coming down. That's all good and well. But then recently it had a bit of a spike. What is it doing like right now? Because I can never be bothered to watch the bloody maize prices, how it's trading on the market.
Yeah, I think over the last quarter or so it's probably picked up a little bit, but it's still down substantially against
where it was
a few years back. And these guys got a nice graph where they got the input cost versus what they get for the chicken out there. And of course the currency helps these guys to be competitive on a global perspective as well. So
shall we call it hot or
I'm
not
inclined to
on
go hot
RCL?
on the argument. I think Gerbrand's argued it very well. Hot on that one.
Hot.
Yeah, we hold some of them, so I'm hot on RCL Foods.
Thank goodness for the consistency of your strategy there.